Your mortgage rate watch for Thursday, February the 24th, and I'm Keith Akata with the Mortgage Reel. Well, talk about riding the wave. It's totally changed overnight. Everything has gone from the stance of what's going on here locally within the United States as far as inflation, better numbers coming out from the initial jobless claims, good economic data reports coming out within inside the United States, all focused on what's going on in the Middle East and showing how dependent we are as a country based upon oil and how that oil is going to impact our overall inflation and the recovery of the United States. The cost of oil has become the biggest concern with the crisis in the Middle East stemming from Libya and how their oil production is going to almost come to a complete standstill. The biggest thing coming out of this right now is gas at one point, even as today, spiked as high as $103 a barrel. Now, comparing to where this was 4.5 years ago as far as prices when we saw the last oil spike, this is going to send prices at the pump anywhere from $4 to $4.50 a gallon this summer. And when you're talking about $4 to $4.50, well, not only talking about what oil does for us as a consumer, but as far as plastics, petroleum, the cost of goods, transportation, groceries, everything that needs to be moved across this country and put onto the shelves so that we can buy it, everything across the board goes up. So now the whole fear of if gas rises too fast, inflation kicks in but doesn't affect the mortgage rates, overall affects the consumer, economic recovery is going to come to a slower pace just because of the fact that corporate America doesn't show the profitability it originally was poised for going into the second half of this year. Treasury auctions this morning received a B grading, and again, this is all taking a back seat to what's going on with the Middle East. Normally, the initial jobless claims and on top of the mediocre rating on the bond auctions would have put pressures on yields to move higher and therefore translating into a gradual rise in interest rates. However, with again the concerns in Libya, it's done the exact opposite. All the focus right now definitely is on oil. As you can turn on CNBC and watch all the chatter, it's all about oil, what it's doing to the impact on the economy and what's doing to inflation. On the other side of that, keep in mind that with the concerns in the Middle East, the United States is still the safe haven of the entire world. And with that safe haven, the bonds are definitely the beneficiaries, and we're seeing interest rates move in the positive direction, meaning lowering, helping out homeowners in today's market. Make sure to check the homepage of Homeowners Education 101 on the increases of the credit risk pricing that was just implemented by Fannie Mae and Freddie Mac and how that impacts any current or future homeowner that's thinking about either refinancing or purchasing in the very near future. Leave any comments or feedback below, as it's not only appreciated by Team Mortgage Reel but also by current and future viewers. Join the conversation on Facebook at How to Beat the Banks and like us when you're there. Otherwise, we'll be back tomorrow with more updates on your Mortgage Rate Watch.